Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on out there? It's January 30th. And I'm Frank Curzio, host of the Wall Street Unplugged podcast, where I break down the headlines and tell you what's really moving these markets. Speaking of markets, they're pretty crazy out there, right? A little confusing. It's earnings season, right in the middle of it. You've seen a slowdown every place, a global slowdown. Companies have been doing good, reporting decent earnings, but the guidance has been a little weak. I'm going to cover this all of earnings season. So far, it's about 30% of the companies that reported Q4 earnings and results so far. I'm going to break down what I'm seeing, interesting trends later on in my educational segment. But first, I have some exciting news. A Curzio equity token is launching next week, probably late next week. I'm getting a lot of questions from you, especially over the past few days, because I sent everyone basically on my email list my recent presentation. That was the one from the Vancouver Resource Investment Conference, and that was from last week, which, was taped, where I spoke for 25 minutes. Yes, unfortunately, you had to look at my face for 25 minutes. But I explained about why we're raising money, how we're going to grow Curzio Research into one of the largest financial newsletter publishers, a whole growth strategy where the focus is going to be on you, the customer, making your money, not these, crazy, but where so many other people benefit except for you. Bring on great people. We have a lot of people out there that want to come work for us. And, we have the strategy laid out. Fantastic. We've done a great job doing this. We add so much stuff to our white paper. And it was great. I mean, we got great feedback. It was not the easiest of presentations, but it flowed well because you're explaining, hey, this is what we're going to do. We're looking to raise money, but we're doing it through something that's original, which is a security token offering. And I spoke about the industry of security tokens even before I got to ours, which is a Curzio equity token or equity owners token. And I talked about how this trend is the most exciting thing I've seen since the creation of the internet. I'm telling you guys that, and just to show the credibility behind it, is I'm basing my company, my reputation on it. But I really laid it out, layman's terms, of why this is the most exciting thing I've seen since the creation of the internet. Just the examples why. Explain how tokenization is like Uber. It makes sense from every point of view, issuer standpoint, investor standpoint, everyone involved. Then I broke down the industries it's going to disrupt, including investment banking, crowdfunding, stock exchanges, even royalty companies in detail. And then I finished up talking about our Curzio equity owners token. We're qualified investors. You need to get an equity stake in my company. It's the first ever in this industry that's doing that. Right now, they all say, well, you're partners with us and this. No, now you're a partner. Now you have an equity stake in my business. As it grows, you're going to benefit. That's what a partnership is. That's what I'm offering you, something you're not going to get from any of our competitors out there. I went over the details of the offering. Again, it's going to be available to qualified investors or credit investors. That's how we have to set it up. And a year from now, it's going to be available to all investors. And when I say a year from now, a year after our offering closes, which is going to be a 6 to 8 week window, which is still deciding. And then I ended the presentation by saying, hey, listen, even if you don't believe me, and you see this, hey, it's chubby kid up there, picture this, even if you don't believe in our deal, the Curzio equity owners token, right? Which, we're going to raise money to grow our business. I said, please do me a favor, start researching this industry because it's fascinating. It's not coming, it's here. And you can see by the examples I provided, it is here. There's big institutions talking about it now. It's going to be a monster industry. And again, it's something that makes sense. And that's why even after I was done with the presentation, the response was overwhelming of people saying, Frank, what do I need to do to invest in this? And again, what people say and what they do are two different things. But it was really cool because I tried to lay it out to people who have no idea what tokenization is, who don't understand this market at all. And I just try to lay it out and saying, this is why I have been more excited than anything or any trend that I've seen in the past 25 years. So if you haven't had a chance to look at my presentation or that video, you could send me an email, frankcurzioresearch.com. We could send it to you, or you can go to our YouTube channel. It's also on our website, curzioresearch.com. It's for free. I'm not pitching anything. If you want to see it, again, if you're interested in our Curzio Equity Owners token, that's perfectly fine. That's cool for qualified investors, but you'll get a better understanding of why I'm excited. And, hopefully, again, if you have questions, if anything, feedback, negative, positive, please, give it to me. But for me, you'll see me lay everything out there of why I think this is an incredible market and why we are so early to it. And you have a chance to make a lot of money. So with that said, I've been talking about a Curzio equity token for over a month now, as you know, and some people who aren't investing are like, all right, Frank, go on to stocks and earnings. I get it, but my excitement. I explained it. I expressed it. I'm going to make sure that all my subscribers, my listeners, you guys are going to get a special deal just for the 2 weeks. I'm not opening it to anybody else except for you, where there's going to be a 10% discount on top of everything else we're offering. Equity stake, we intend to pay a dividend. I have to say we intend to pay a dividend of 3%. Hopefully we'll quarterly, even during that lockup period that you have, which I don't think is, I know anyone in any industry, any offering is not doing, right? They're not doing an IPO and giving you a dividend, which I think is really cool and original. So the 10% discount is where our minimum investment is $25,000, which again is available to credit investors. And that token will go free trading 12 months from now after offering closes. But if any of my listeners, subscribers come in within the first 2 weeks and say you invest a minimum of $25,000, our token price is coming out at $5. Yeah, it's going to be 12 months after the lockup period, but you're going to get 10% or $2,500 worth of tokens for free, which basically lowers your cost basis to $450. So after that 2 weeks, we're going to be opening up the deal to funds. Several have already expressed interest, which I'm excited about. I have meetings set up with them over the next few weeks, and then I'm going to open up to everyone outside our list. But again, I mentioned to you the excitement about our launch and had actually nervous as well, right? Since we're kind of first to the market, and I'm basing my company reputation on this. But more important, I'm going to interview a first-time guest right now. It has nothing to do with Curzio research or our token. This person is doing something incredible through digital securities tokenization. And if you listen to the interview, you're going to see why this is such an incredible industry of things that I'm not even thinking of yet. It's like the internet when it was created. Nobody understood. Like there was no crowdfunding. There was no social media at the beginning. It was just AOL. Like nobody's... Expedia and Priceline and Amazon, all this stuff came after. Now you're still seeing it be invented going forward, where you have algorithms, you have just so many different things. Where Facebook is not even that old. Now you're seeing big data analytics. It just keeps going and going. And what this person is doing is just incredible. Now his name is Matthew Sullivan, and he's not some young kid, but a seasoned vet. He's a corporate financier in London, where he worked with billionaire Sir Richard Branson, worked as a corporate finance team. He's also director and trustee of Virgin's London Air Ambulance. The seasoned entrepreneur, proven track record, especially in real estate, where he was a co-founder of the $50 million Secured Real Estate Income Strategies Fund. We're not talking about someone who's just starting an ICO. You're not going to get an equity stake or nothing like that. You talk about experience, someone who's been in the industry all his life, and Matthew has found a way to tokenize the residential real estate market. And it's not a joke. Again, it's not some idea written on a cocktail napkin. Hey, Matthew's company is called QuantumRE. It's up and running now. They own properties or pieces of property where they helped homeowners sell a fraction of the equity in their homes without taking on any more debt. So for me, when I heard this, and I spoke to him through emails, I went through this interview. Again, so let me research Matthew, stories for real. I didn't research the idea too much before the interview because I know the housing market well. It's a sector I covered for decades, so I had tons of questions I wanted to ask him. And just go boom, and you'll see me. I'll probably ask 2 or 3 times during this interview about how this works, how does this benefit homeowners, how does this benefit your company, how does it benefit investors since they have a security token tied to this, where you're going to get an equity stake. And honestly, guys, this interview blew me away. And I think after you listen to it, you're really going to see how many different doors this is going to open up through tokenization and the massive potential of this incredible industry. And you know what? Let's get to that interview right now. Matthew Sullivan, thanks so much for joining us on the podcast.
Frank, thank you for having me. It's a pleasure to be on.
Thanks so much. Well, you are first-time guest, so The stage is yours. I just want you to, if you can, I know, it's not the best to introduce yourself and things like that, but yeah, you're CEO and founder of QuantumRE, cryptocurrency startup. You have an amazing background. I want you to talk a little bit more about it since you're a first-time guest, and this way we can get everyone involved, because one of the ideas that you're doing right now is revolutionary. I'm excited to talk about it, but I wanted them to get a nice background on you first. So go ahead. It's all yours.
Of course. Thank you. So my background is very much entrepreneurial. So I started out life many years ago, back in the late 80s, as a stockbroker in London, spent a few years forming my sort of securities understanding by breaking the Far East markets, so the very exciting early markets in Thailand and Singapore and Hong Kong, and then really went through an evolution, I suppose. I became a corporate finance guy for a few years, and over 3 or 4 year period in the late 90s, we worked very closely with Richard Branson. So we became part of his corporate finance team, and ended up working with him on a number of projects, Virgin Genes, Virgin Cosmetics. We were the guys that came up with the idea to fly around the world in a hot air balloon. So, we became great friends with Branson. And then after that, I moved into telecommunications, finance, and technology. So really for the last 20 years, I've been focused on, new technologies and how we can use those to, evolve existing processes or disrupt existing processes. Moved to the US just under 5 years ago, and I set up a real estate crowdfunding company because one of the things I really wanted to do is see how we could marry, real estate, which is a very, solid and dependable industry, with some of the changes that were happening in securities laws over here. So I set up a real estate crowdfunding company, and then the blockchain came along, and we got some fairly clear signals from the future. So that's really what led me into merging, blockchain and seeing how we could evolve, real estate and real estate transactions, into the new era.
No, that sounds great. And someone who's been involved in technologies, I mean, for me, I attend the Consumer Electronics Show every year. For the last 7-8 years, I've been involved in technology all my life. I could tell you the last 5-6 years, you're not really seeing too much innovation, right? It's almost like, all right, how do we improve AI? 5G finally coming, right? It's going to be this year where it's actually, how do we expand on VR, or, AR and whatever? I go smart cities. But what we're seeing here, could you explain as someone who has a history of being technology startups and stuff like that, the innovation, how this is revolutionary, if you believe so, because it's not just blockchain, but you're looking at tokenization, you're looking at having access to more investors. What would you put this on the scale of, based on all the other technologies and trends that you covered over your career?
Well, I think this is really evolutionary. So, blockchain is an evolution. It's a very interesting way of enhancing the reliability and the trust of a ledger. Now, a ledger is a technology that's been around for several, 1,000 years. We use ledgers for every activity, from keeping track of our the bank accounts that we have, to ownership, and ledgers are used and have been used for millennia for keeping track of of all these different things. So what blockchain is a significantly valuable evolution of the ledger technologies that allows us to trust transactions much more. And what that's going to do is that's effectively going to supercharge the internet, because it's going to allow far more transactions to happen with far more people, because they're going to be trusted. So it allows for things like cryptocurrencies to evolve, because cryptocurrencies rely on a data or on an audit trail that you have to trust. If people didn't trust the underlying technology or the underlying ledger behind Bitcoin, then Bitcoin would have absolutely no chance of getting out of the development laboratory. So I think that blockchain is an evolutionary technology. The way that's going to be coming to the mainstream, though, is the way that it's used in conjunction with existing regulations. So new technologies, if they impact or if they require, a regulatory oversight, and they don't get it, then they're dead in the water. But what we've really seen with blockchain and the evolution of using blockchain for securities tokens, as you mentioned, is that most of the market participants now are embracing the fact that we have to work in a compliant way, and I think that's really what's going to bring these types of blockchain technologies into the mainstream.
Well, let's talk about your project, which I find fascinating and it makes sense. Because from the U.S. point of view, there's $7 trillion in equity that's untapped in our homes, right? And the home housing market has come up a lot since the credit crisis. But on the rules in our banking system, it's very difficult to tap that equity now, especially if you're going to buy another second house or third. It's just difficult. It was a lot easier, obviously, pre-credit crisis. But you have people with equity in their homes that are sitting there and they can't really do anything with it. But you have come up with an idea that makes a lot of sense, because when we see blockchain, you hear it on the commercial real estate side. You never really heard anything about the residential real estate side. And I'm interested to learn more about it. But could you talk a little bit more about this idea, because it sounds fascinating?
Thank you. Yes. So we allow homeowners to release the equity that's locked up in their homes without taking on more debt. As you rightly say, if you have equity in your home, the only way right now you can get access to that money is to go back to the bank and to borrow money that is secured against the equity in your home. So what you're doing is even though you paid off that home and you own that part of your home, you can't get your hands on it. And we think that that's a very unsatisfactory way of course of affairs. So we looked at equity release a number of years ago, and there are a number of companies that do provide the ability to unlock equity without taking on more debt. The biggest issue is, from an investment perspective, where do you get the money to be able to buy those equity interests? And what the blockchain and tokenization does for us is to enable us to create liquidity in this asset class. So if you're a homeowner, you can go to us, and subject to underwriting, we will buy a percentage of the current value of your home, and you pay us back when you sell your home. And when you sell your home, we have the ability to participate in the potential future increase in value of your home. So what we're buying effectively are the rights to the potential future appreciation of a piece of your home. So does that make sense so far?
Yes, that makes sense so far. Now, go ahead, keep going.
No. So from a homeowner's perspective, we have the ability to say to them, if you've got equity, we'll buy a piece of your equity. We will write you a check and pay you in good old-fashioned American dollars right now. So you don't need to worry anything about blockchain or cryptocurrency. You don't even need to mention those words. And what we do is, by buying that piece of your asset, that piece of your home, we're effectively creating a real estate asset. And the last piece of the puzzle is we put that asset into a fund. That fund is structured as a REIT, and then we sell shares in that REIT, but we sell them as digital assets rather than as normal share certificates.
So let me ask you this. How do you determine, and we'll use me as an example, just say hypothetically I have a home that's $1 million and I have $500,000 in equity, and I give you a call and I said, hey, Matthew, listen, I want to sell off a piece of my house. What is the next step there's got to be a process where you're looking at the valuation, you're seeing the appraisal value, all right? Because this is kind of like an investment for you, and you don't want to buy a house where on Zillow, which is one of our sites, that tell you, hey, this should be worth this. You really don't know what's inside the house. You don't know how crazy it is, or it could be, valued even more if I just remodel the house. So how do you determine the actual value, and what do you determine the value in order to cut that check?
Well, that's the great thing about houses, is that they're an asset class that's very well understood. So it's a lot easier to value someone's home than it is to value a complex commercial real estate transaction. But you're absolutely right. What we need to do is put these homes through an underwriting process, because we only really want to invest in homes where we think there's going to be that capital appreciation. Now, our team has experience in over 300 transactions in this space. So the people that we brought in, who were previously the the founders of one of the very early companies in this field, they had completed over 300 transactions, which is about $250 million worth of home value. So we've got some very good experience on the team as to what to look for. But we would invite people to go to our website to fill in a very simple application to see how much potentially they could release. We're focused just on California at the moment, but assuming that you're in California, we would look at the home, we would do some desktop research to see the value of the home, how much equity that you have available. You'll tell us that in the application. And then if we want to go to the next stage, we send a valuer out who's going to do an independent third-party valuation on the home. So that's your appraisal, and that gives us a third-party, an independent view of the value of your home. And then if we move to the next stage, we both agree on that value, and then we know how much equity there is. There are limits as to how much equity we will release, and there's also a limit to the amount that we will release added to your existing mortgage. So we have, boundaries in terms of minimums and maximums. But then once you get to the end of the process, it takes about 3 to 4 weeks, and you receive your money, and we receive effectively our asset, which is that silent partnership in your home.
So let me go over a worst case scenario, right? Because for us, we have insurance and stuff like that. Say if, God forbid, something happens to the house, it burns down, a tornado, whatever. How does that affect everything on your end or my end? Because I got a check for you already and say I unlocked $200,000 out of the $500 in equity I have, and you sent me a check and you praised that I agreed. Would that change the equation at all? Because California, and I'm just bringing this up, California wildfires and stuff like that. Does that change anything with you? Is it like more insurance related where you cover yourself and things like that? I was just, again, it's a scenario that probably doesn't happen. You have 300 homes. I'm just curious.
Yeah, exactly. No, the important thing is it's a bit like if you're a lender to a home, then you insist, and part of the terms of the agreement are that the home has to be insured for all the various risks that could affect our assets. So we very much rely on insurance. So in the case of your example, the house would have been insured for that particular risk. And we make sure that the renewals, that we get evidence. So part of the management process of these assets is that we check with the homeowner every year that they have insurance to make sure that everything is protected.
Now, from my point of view, okay, great, it's awesome. Now, okay, so now you take the asset and now you put it into. You said now you have a fund for this, right? It's a REIT.
Yes, exactly that. So we've created our real estate assets. It's a great asset because funny enough, you'll be surprised, but there's actually $15 trillion worth of equity in U.S. housing. But we did some research the other day, and it's astonishing even to us that there are literally tens of trillions of dollars worth of equities just sitting there. About 40% of those in California. So we take that interest in your home, that real estate interest, we put it into a real estate investment trust structure, and then we sell shares in that fund in the same way that we would sell shares in any other normal real estate fund. The way that we create those shares and deliver those shares, they're delivered as digital assets or otherwise known as security tokens. So that means that whoever buys these, once they've gone through that minimum 12-month hold period, they have a very good prospect of being able to sell their shares in a secondary market. And there's a number of secondary market digital exchanges that are becoming operational in the U.S. Even today.
Yes, got T0, Coinbase is going that way, Open Finance, and probably dozens more are going to be launched. Which sounds like it sounds like a fascinating idea. So, as the digital token, if I purchase it, is that like tied to the equity? Am I getting a dividend? Or is it based on, because one of the problems that we've had with ICOs is that there's really nothing tied to them, right? It's based on the products and services, and that's it. Where if Microsoft comes in and buys you for $50 billion, the investors get nothing because there's no equity stake attached. So is it token, like the digital asset token is usually backed by an asset? Is it just backed by the assets? Is it equity stake? That's one of the things I wanted to try to figure out.
It is exactly that. So the digital tokens that we sell, they different to all of the ICOs that we've heard about so far. We're leveraging the blockchain technologies, but the asset that you're buying, the real estate token that you're buying, represents real ownership. It's a security, and it represents ownership in the fund. That fund owns all of those real estate interests. So that means you are buying a token tied directly to real estate assets. So you have ownership of that of those assets.
Wow, that's incredible. Yeah, I mean, you're well ahead of the curve on this. I mean, it just sounds like a fantastic idea where they're getting an equity stake. But with that said, you're with me where, I've been talking about my, Curzio Equity Owners token. We're launching for our financial newsletter business, but is this token already created, or is it kind of like in that holding period where once we launch and we raise money, it's going to be a 12-month period, and then we're basing on it on like T0 launches exchange, and hopefully we'll be trading on some of the major exchanges. But how does that go where, say, people listen to this call could actually buy that token? Can they buy it yet, or they have to wait just like they would wait with, again, there's a lot of exchanges going to be launched just with digital securities in the U.S.?
Yes. Well, you can go to our website. You can buy the tokens today. The only stipulation is, and this is the securities laws that you're referring to, you have to hold them for a minimum 12-month period. So what we can do is we can deliver the token for you. Also, if you don't have a digital wallet, we have a partnership with Prime Trust, which is a regulated, insured custodian. They will be able to hold the tokens in their licensed and insured storage facility, so effectively their wallet. So they can hold the tokens for you, so you don't even need to have your own wallet. But after a 12-month period, then you are free to sell those shares to other people, and that's where you'll be able to sell them on the various exchanges that we will have relationships with at that point.
And how are you going about, I'm asking for personal reasons, establishing relationship with some of the exchanges? And a lot of this is new because, that's the next step for us. And, we have ties to them, but I'm wondering that process where, nobody really knows that process. I don't know if you're even there yet or not because, some of these haven't been launched yet, but I'm just curious if you went through that step. And if you haven't, it's fine. I obviously haven't. I'm just trying to learn as much as I can of this, industry. I think it's going to be incredible.
It is. I think all of the exchanges are at an early stage. So we partner with securities. So our validation layer, the technology that we partner with, is technology provided by securities. Now, securities have relationships with a number of exchanges that accept the securities protocol. So that gives us a bit of a head start because these exchanges already know that we are a compatible token, because we use the security validation, smart contract, the validation protocol. And that enables us to meet securities regulations. But, we're in an early stage of discussion with these exchanges because the exchanges themselves are at an early stage. And I think there's only one so far that's actually completed a secondary market trade, and that's Shares Post. But Shares Post does have a relationship with security, and we are, in discussions with Shares Post, but our tokens won't be tradable for another 12 months. So, really, we have a little bit of time to build those relationships to get to the point, where people will be able to sell their tokens.
So that's incredible. So you have and we're not talking about something, guys, and I talk to the audience here, Matthew, where it's, you have like the ICOs that you invested in, and they have an ID on a cocktail paper napkin. This is what we're going to do. You're doing it. You have assets in your portfolio already. The token is created, and once these exchanges launch in a 12-month period, then you're going to be able to trade. And once you do that, obviously you're going to get even much more attention, much more notice. You can even do further capital raise just to build up that portfolio to buy more assets, right?
That's right. Now that will also be the tradability. The secondary market trading will happen earlier than 12 months because we've applied for a Regulation A+ exemption. So in other words, the real estate investment trust that we have is currently offered under a Regulation D private placement exemption. And that has a 12-month lock-in. But almost 3 months ago, we started the process of registering a Regulation A+ offering for exactly the same fund. And as soon as that is qualified, which we expect to be sometime around May or June this year, then we will be able to issue tokens under that exemption. So we will be in compliance with securities regulations. But the benefit of having a Regulation A+ offering is that the tokens will become immediately tradable and are not subject to a 12-month lock-in period. So anybody that buys our tokens later on this year will be able to sell them immediately in the secondary market if they want to.
And then with the Reg A offering, you don't have to worry about just accredited investors coming in. Is that correct?
That's correct. So Reg A is great because there are restrictions in terms of how much you earn and how much you can invest as a percentage of what you earn. So it's not completely restricted, but it does allow you to have an unlimited number of accredited and an unlimited number of non-accredited investors.
And what kind of demand are you seeing? And thank you so much. It's important to go to regulation because it's a new industry, right? It's the boring part, but everybody, you want to know that this is coming. And I appreciate, the easy explanations and how you're laying that out. What kind of demand are you seeing right now in terms? Because to me, this sounds like a fascinating idea. It's great it's something like you have the same thing with me, where you have to really sit down and explain it to people.
Well, I think really there's demand from two sides. The first question is it interesting to homeowners? So do homeowners want to release equity without taking on more debt? And the answer to that question is a resounding yes. So we started a marketing campaign 4 or 5 months ago, and we've received almost 1,000 inquiries so far from homeowners who have all wanted to find out more about how they can release equity. Our team, historically, we know from their experience that there is enormous demand from homeowners, particularly as interest rates increase and as people feel that we're going potentially into a difficult economic situation. People need money. If the money is locked up in their homes and we can release it for them, then we are an ideal solution for them. So we're absolutely convinced, and we know from experience that there is demand. From an investment perspective, the liquidity is the critical component that unlocks this asset class for investors. It's a very attractive asset class because we're buying into a very well-researched, very well-understood asset class, which is single-family, owner-occupied residential homes. We are the only way of getting access to that asset class, and as we know, it's a multi-trillion-dollar asset class, so it's not trivial. The liquidity of the token enables people to buy in, wait for the value of the fund to increase, and then sell and lock in their profits. So that liquidity creates massive demand for our products, and we are very pleased so far with the level of interest we've had from individuals, from accredited investors, and from family offices who are keen to get involved not only in asset class, but also they see us as an on-ramp into cryptocurrency investing, where they can actually buy a blockchain-based token, safe in the knowledge that it's backed by real assets.
Being that you're first to the party here, and I feel like I'm first to the party with our industry as well, are you worried about infringing on the big players' turf, right? Because this is the banks we're talking about and things like that. Like one of the things is the investment banking industry has been making a lot of money doing these types of deals, and I feel like coming in and giving it, making them available to every investor, that the fees are lower and stuff. Is that actually a concern, or did you see them coming in this with both feet once we have regulation, like banking? Because this is an exceptional idea.
Thank you. Well, I mean, we would obviously welcome the banks. We don't compete with. I think the only competition we're up against is a HELOC or a second mortgage. So we are competing with the banks. If someone is in a position to take out a loan and they then decide, do I take out a loan or do I use Quantum's equity release solution? So that's where you've got competition. We don't compete, however, in situations where people don't want to take out debt or don't qualify for the debt. So as far as competition is concerned, we work very much hand in hand with many existing financial service providers because we're not increasing the debt on a property. So if you're a bank or a mortgage company and you've lent property to someone secured against their home, what you really don't want to happen is for them to take out more debt, because then you're increasing the leverage. You're making it more difficult for people to meet their monthly payments because they've got more outgoings. With our solution, what happens is we provide access to capital for people, and because they haven't got those monthly payments, they become more liquid, and they're probably more able to pay off, their loans or their mortgages. So we're not going head to head with the banks. We're not competing directly with the banks. We are an asset as far as the banks are concerned, because we're creating liquidity in an asset that otherwise, they wouldn't have any interest in. And with that liquidity, we are making their loan more secure, because the people that borrow the money have more money in their pocket and are more likely to be able to pay their mortgages. So it does work. It's very much a win-win, I think, for both sides.
Yeah, that's incredible. Well, Matthew, listen, I really appreciate you joining us. This is fascinating. I researched you, but I made sure I didn't research too much of this idea, because I just wanted to go free-flowing with these questions because it sounds so fascinating. And, I'm very impressed. I really am.
It's very kind to say that. Thanks, Matthew. I appreciate it.
Well, if Matthew, if someone wants to learn more about you, learn more about what you're doing, how can they do? You have a website they can go to? I think you said there's some place that they can go to fill in information.
Yeah, it's QuantumRE, so it's QuantumRE.com. We have website, so we have videos, we have books, we have a large number of articles, and there's research there. And so please go to the website. You can apply online, you can invest online, you can read all about us, and there's contact details there. So if you want to reach out to any of us, we would be delighted to answer any questions you might have.
Well, that's awesome. And Matthew, thank you so much for coming on the podcast. And listen, I look forward to talking to you in the future. I love being part of this industry, and thanks so much for coming on.
Wonderful, Frank. Thank you for having me. It's been a pleasure.
Okay, guys, great stuff from Matthew Sullivan. I mean, I thought that was incredible, because I was expecting a lot of my questions not to be answered. And I was also expecting, because I'm seeing this right now, even with some security tokens, where they'll come up with a great idea, but the token that they're selling to investors is not shareholder friendly. I mean, you're not really getting an equity stake. And they're like, yeah, you get paid dividends in the future. And they're starting these companies, and it's kind of like, come on, I'm investing. Why would I invest? Especially these people, launching these big real estate deals through security tokens. And they're like, well, once we get, $100 million and we're going to buy all these properties in New York City and this and that and all the big cities, and you're going to, be able to participate in that growth. And once we start generating cash flow, I'm like, what are you talking about? So I get no equity stake. We're putting all this money into it, and we have to wait until these properties pay off, or however they will pay off, whether it's rental income or whatever, and then I'm going to benefit. In the meantime, we just handed over $100 million for you to go buy properties and make a fortune yourself. So you want to make sure, it's not just the idea that makes sense. You have to make sure the deal is structured in your favor. And that's why I love this interview, because a lot of people have reaching out and said, hey, we started a security token. And when I look at deals, I'm like, I'm not putting this in front of you guys. It's absolutely not. This is different. Matthew's doing the right thing, giving people an equity stake in this business, creating a REIT. I mean, just focusing on California right now, but how incredible is this? How disruptive is this? Is there more questions? Yeah, let's see. But I mean, it's he owns properties, several dozen properties. He's getting this done right now. It's good for the homeowner, where they're getting money, able to tap that equity in their homes. It's good for them because they're taking a piece of, a big market in California, big housing market. Owning that real estate over the long term, they're not leveraging it. So this isn't like CDOs being created in synthetic. I'll be honest with you, in 15 years from now, it's probably going to happen, which happens in every growth industry, right? Because people get stupid and try to get too greedy. We're not close to that stage right now. And I don't think I don't see Matthew doing that. But kind of amazing that this is something that you don't think of what tokenization could create. And there's $300 trillion in assets. Most are liquid that can be tokenized. Not all of it's going to be tokenized, but we're seeing paintings, we're seeing collectibles, we're seeing companies tokenize their best assets, avoiding all the investment banking fees. We're seeing these exchanges like T0 being launched. Coinbase, over a dozen security token exchanges are going to be launched where you could trade these things similar to stocks. You're going to have to sign your customer documents, anti-laundering documents, proof of that you are a credit investor. Why? Because this isn't a game. This isn't something where it's the ICO market where all they had to do is give you a token. That's it. That's all they were liable for. They're not even telling you how much money they have left. They raised $10 million. Most of them kept it in Ethereum and Bitcoin, what they raised it in. That crashed 80%. Did you know that? Did you know they lost that much money for you? because they didn't put it into dollars or fiat? Is our sites up and running? How many ICOs on the market right now? There's over 2,000. How many actually are generating revenue? It's been over a year since a lot of these companies generated money. They have all this timeline of what they're going to do with this timeline. They're running out of money. They don't tell you how much. This is different. Everything is going to be similar or a lot similar to stocks where your money is safe. It's going to be insured. You don't have to worry about these fractions where you don't understand the conversion prices. It's going to be a lot easier. You don't have to invest money in Coinbase and then take that money from Coinbase through your wallet and go to Binance, right? Because you can't invest directly in Binance because they're not going to accept any money from your bank, right? Because there's still not a trusted source. Most is legit, but not all of it. This is going to be fully legit. You're going to know all your customers. It's kind of like giving you Social Security when you open up a brokerage account at E-Trade, Ameritrade, wherever. Scottrade, Fidelity, Charles Schwab, whatever. This way you're going to be able to pay capital gains on your winners just like you would do on, your investments if they go higher. You want accountability. This is the regulation you need. People need to understand that money is safe if they do this. And that's where the industry is turning to. And it's turning to it right now. So it's really exciting. I like that interview. Again, I always say this podcast is about you, not about me. I've been talking about the Curzio Equity Owners Token. You know how excited I am. And yes, I'm talking about it because I'm basing my whole company on it. Big capital raise, and we're very excited. But I wanted to bring on someone outside of that. This way, it's not just, you're listening to Curzio. He's like, wow, he's talking about. No, I'm going to give you real life examples of how this is disrupting so many different industries. And you're talking about going head to head. I mean, he kind of explained, well, it's not really the banks, but the banks aren't allowing you to tap that equity in your home right now. It's very difficult, especially if you want to take that money out, buy a second home or a third home. It's not easy. And even though that's your money, that's your equity. And this is a fascinating idea. Let's see. I'm sure they're going to run into, bumps in the road. It is new, just like, all new industries, but just exciting that you're seeing the capabilities of things that could happen because of tokenization. And the people I've been talking to over the past 6 months, and maybe I'm not doing a good enough job of explaining it where everybody understands it, but this is the reason why I'm so excited. Deals like this, things like this that are coming out, and after their lockup period of 12 months, which a lot of these deals have, they're going to go free trading. So you're looking at mid-2019 and on, 2020, every investor, average investor is going to be able to sign up for T0, sign up for Coinbase, and begin trading these tokens as they go free trading after 1 year. You don't have to wait 8-9 years of, Uber getting funded how many times where it's going to come out at a 60 billion, 70 billion, whatever billion market cap where most of the growth is gone. You're going to be able to invest in these companies early on, like the venture capitalists did in Facebook, in Twitter, even in Airbnb. That's the opportunity you're going to have. It's going to level the playing field. It's not going to be a boys club anymore when it comes to investment banking when you need $20 million at Morgan Stanley, Goldman Sachs to get into their best deals. No. That's why I'm excited about this interview. With that said, the podcast is about you, not about me. Let me know what you thought of that interview. Let me know what you thought about Matthew. Frank at CurzioResearch.com. That's Frank at CurzioResearch.com. Quick educational segment because we are in the heart of earnings season. And man, I mean, you're seeing a lot of crazy numbers. With the earnings coming in, it's about 30%, I think, of companies reporting thus far. But I just want to give you some insight of what I'm seeing since companies like NVIDIA, Caterpillar missed badly. Apple came out with okay numbers. The stock rocketed higher today, which, is a little bit surprising. I mean, they lowered numbers, and I still think there's a lot of optimism on the stock right now. I mean, people are like, all right, that's it. They're done. They have all this cash, have everything. But remember, finally people are coming out. You see now saying they're an iPhone company. And one guy at Citigroup, I think, had a note and said, even if they grow their service division by something like 50% over the next few years, it'll still only account for like 25% of sales. So it's an iPhone company. iPhone sales are slowing dramatically. You're after the cycle. There's not too many people. There's going to be a lot fewer people buying these iPhones. They're going to be discounted tremendously. I just think those margin numbers have to come down. They came down a little bit. I think the sales numbers have to come down a lot more. Analysts are still optimistic. So I don't know. I think expectations are high. It was nice. Let's see if that's a real quarter or not. Remember, this is the same quarter that they warned where the stock came down 10%, and they just came out with the numbers, kind of the same thing, and the stock rebounded. But we're down from what, 220, 230. Company lost about $300 billion in market cap. $300 billion in market cap. Guys, just to put that in perspective, if I had to guess, $300 billion in market cap, that $300 billion is probably would be ranked in the top 15, maybe 20. If it was a publicly traded company, a $300 billion market cap would probably be like the 15th, 20th largest company in the world. I'm guessing. You can figure it out, but it's pretty close to that. That's how much $300 billion in market cap is. That's incredible how much they lost. I mean, IBM's market cap is $120 million. So their stock fell pretty hard, Apple stock, and now it's rebounding a little bit. But for me, I mean, you need a little bit more confirmation. I like to see a little bit more of a cheaper price. Again, and that's the talk of the town right now. The stock actually reported kind of the same thing they said they're going to report it, but when I look at the numbers, it still seems a little optimistic to me, especially since that cycle's over. Now, when we look at the industry as a whole, because we do have some numbers that came out that were positive. Boeing blew out the numbers. They were good. Pfizer was okay, but the stock went higher. So you're even seeing stocks that, are, even if they're missing a little bit and warning a little bit, they're still doing okay because they sold off tremendously still. And we're up about 10%, 12% from the lows, but we still, these stocks got crushed in October, November, December. Now we have 30% of the companies reporting earnings thus far. This is Q4. And we're seeing right now around 8 to 9% growth, which is lower than the 12% that was expected after Q3 numbers were reported. Sales are growing around 6%, so decent numbers. But with that said, if I explain anything to you over the past, decade or whatever, you listen to this podcast, it's all about the future. All right, it's cool to say, okay, this is what we earned the past 3 months, but it's the future which drives the stock price. You could blow out the numbers and you're expecting $1 in earnings and say, hey, we reported $1.50 in earnings. If you're supposed to report $1.75 earnings, whatever, the quarter next year, and you lower that significantly, your stock's going to get crushed. It's all about the future. And when I'm seeing these companies report, about 30% thus far, a lot of them are offering conservative guidance or lowering their guidance. So we're looking around about 100, 120 companies reporting thus far. And out of the 120 or so, 30% talked about the shutdown impacting guidance, and that's kind of over right now. We'll see if, what happens in a couple of weeks from now. We have companies talking about China being terrible, especially Apple, Caterpillar, NVIDIA. But because of these warnings, and we'll say, well, earnings are growing 8 to 9% this quarter, they're only expected to grow in the low single digits, maybe 4, 5% growth. That's what we're expecting right now, going for the next 3 quarters on average. So through 2019, we're not talking about, 8% growth next quarter, 6%, and then 4%. No. Next quarter is about 4 or 5% growth. The quarter after is kind of the same. It's a lot slower when we were growing, 20% plus a couple of quarters ago, and a lot of it was tax reforms. But we are seeing a slowdown. Again, the slowdown is priced in, is expected. If we look at the entire S&P 500, the major index is trading at 15 times forward earnings. To put that in perspective, like I always do, I just don't throw numbers at you. The 5-year average multiple in the S&P 500 is 16.5. So we're traded below that right now. So we're not super expensive here. Yes, it's factoring growth. Doesn't mean that the markets can't come down and fall further from here. I do like some of the positive where, considering a deal with China is likely going to happen over the next quarter. I mean, we're seeing China's numbers are horrible. I mean, beyond horrible, which we've seen. I mean, you just look at all the economic indicators. It's been absolutely terrible. And also, it's starting to impact the U.S. So I could, we're in hopes that they can come up with a pretty good deal. I think it's in the best interest for both of them right now. And I believe that will happen over the next quarter. I'm surprised it didn't happen. Listen, they didn't do anything crazy and said, okay, no more tariffs for now and negotiating, but just to get a solid deal in place, it may take a while, but I really don't see this thing escalating and going crazy because it's just going to hurt both countries. And I think that's kind of the consensus right now. We're also looking at the Fed, who's been tightening, not the best thing, right? Trying to curb that growth. But they're going to stop tightening this year. Maybe see another rate hike, maybe 2, but they're likely done. But I have to tell you, the one thing that really worries me that I'm seeing right now, and we've been seeing it, and it's a trend, we've been seeing it, but we're looking at global growth, China, Japan, Europe. I mean, it's slowing dramatically, and it hasn't found a bottom. This trend is still going lower and lower. We're also seeing very big signs of deflation, which I think is surprising the market. And like NVIDIA, where its customers said, they don't want to pay the super high prices for the new graphic cards, and they're going to wait for prices to come down. That's new. That's new. We haven't seen that. I mean, this is a market where, hey, you know, we're spending on everything, retail, money, you're funding deals, ICOs. You don't care if you get equity stake. You're raising $15 million. Really? The customers are saying, well, you know what? I love it, but it's a little too high, and I know it's going to come down, so we're going to wait, which is interesting. And that's what happens when you try to come out with a revolutionary new product every year. Because for you to keep paying that price, like an Apple iPhone, every single year when they're shoving them down your throat, listen, I get it. You're a company. You want to have earnings every single year. But you're not going to come out with a fascinating, great new product every single year, kind of like a car. Yeah, it's cool, all the bells and whistles, but really you can have a car for like 10 years now. It's going to run perfectly with 150,000 miles. I mean, they're built amazingly now. Do I really need one to upgrade every single year? And you're seeing auto companies, you're seeing a lot of these companies with models like that. Hey, we have to, you know, these graphic cards, you know, what do they call, touring or whatever, these new great graphic cards. But you know what? Last year's graphic cards are pretty good. So, you know, we're holding off a little bit. So we are seeing deflation, which is, you know, a little scary. You're going to probably see the Fed, if I had to guess, probably start lowering rates by 2020. But as individual investors, and I'm telling you what I'm seeing a lot of great ideas. I mean, small, large caps down a ton still. Some of these names still growing earnings and sales, but are trading down 20% plus from their September highs. Maybe they issued, you know, a little bit of weak guidance, but these things, once they slow 5%, they're down 15, 20%. You're like, whoa. And I tweeted at Frank Curzio about GameStop. Listen, everyone, I know about the trends of GameStop. I know online, I know video games. You know, again, I'm very familiar with this industry with Take-Two and everything else. They're following that company since $7, and now it's, you know, over 100. I understand the trends. Now, GameStop went out and said, we're looking to get bought, and, you know, they have a lot of stores. It's pretty much set up very, very well for a PE firm, private equity firm. And I think they were looking for $22 to $25. I think the stock was trading like 16. And they just came out and said, hey, you know what? A couple of companies that we thought we were going to deal with couldn't secure the financing or whatever they said. Basically, they didn't want to pay more than $20 for the company. And you say, well, GameStop, they're dead. They're gone. I know. We heard that about Macy's, right? And they're still here. We heard that about, they're not gone. They're slowing. You look at GameStop, generated $9 billion in sales. They have an amazing balance sheet. They're generating hundreds of millions in cash flow. I mean, this is a company with very good fundamentals. A lot of their leases for their stores are up, which means it's going to be very easy to close their stores, which is important. That's what a PE firm does, right? They want to leverage it, close the stores, generate as much money as they can for the company, and try to sell it off and go public at a different date. 22 to 25 didn't work. The stock is 11. It fell 25% after they didn't get a deal. It's trading at 5 times forward earnings, 0.7 times book. Again, I know the video game industry. I know what's going on online, but still, when you go into these stores, if you look at the biggest seller, the biggest game seller this year was Red Dead Redemption. They had lines out the door, right? They're still selling those discs. GameStop's one of the only place where you could physically go into where these guys know everything about every single game. You go into Walmart, they don't know the difference between a video game or a hockey stick. You know, it's insane. Anyway, Target, they don't know. They just throw things up there and say, here, you know, these guys played the games. They'll be able to tell you there's value in that. I don't think it's a dead industry. I think it's slowing, but $9 billion in sales. I look at a company, it's right for a PE firm to take over 15, 16. That's 40% upside right now. But just listen, I got to do more research into the deal. Everyone's totally negative on it, but it's trading as if, the company could be bought and sold. I mean, they have assets. It's not horrible, but just certain deals because people are just running to the exits. And I'm seeing a lot of really good opportunities. I mean, one I just recommended was a biotech company. And I had 2 or 3 people say, this biotech company is terrible. And you know what? You're right. It was terrible. It was $50. You know what? But it's $10, $11 in trading for the amount of cash it has on the balance sheet and has an amazing pipeline of drugs partnered with some of the biggest players. So don't hate the company. Hate where it's trading. At a 50, 40, 30, 20, didn't make sense. But at 11, when you're getting it where it's trading near cash, and you have an amazing platform partnered with some of these, that's what we did with Human Genome Sciences. I think it was 2013, 14. When I recommend that company, I mean, they had an FDA-approved drug. It fell to 7 or 8. Glaxo had partnerships with them. It was $30, $40. It was trading higher when they didn't have an approved drug for lupus, one of the only approved drugs for lupus. And I say it just makes sense for Glaxo to come in and buy them out. I got lucky with my timing. It happened 3 weeks after. I mean, again, but when I looked at it, it just looked fantastic. I'm like, listen, there's a little risk here, and it's tons of upside if any of these drugs in the pipeline do well. Or just, again, you just go from bad to less bad. And these things, you look at a stock that can easily pop 30, 40% on that. And if any of these drugs get approved, since they're from cancer, basically, once you get approved for certain cancer, now you get approved. If you look at Keytruda, which is Merck's top immunotherapy drug, Opdivo is Bristol Myers' top immunotherapy drug. These drugs were approved. What happens? They're in like hundreds of different trials with other cancer drugs to get approved for other forms of cancer. That's what Celgene did. That's what Genentech. You're looking at all these. That's how you become, $50 billion, $100 billion companies. But there's huge reward there. And buying a company at this level, this is what I'm seeing in the market right now. It's selective. It's not every place. But you want to be careful. There is, a big slowdown going on right now, especially globally. You're seeing earnings. If they do warn, a lot of these companies, people run to the exits. Use that volatility to your advantage. Be smart about it. There's no rush to buy anything right now. You could afford to wait. We're in a market where you don't have to pay top price. It's an investor market right now. You could wait. Chances are that stock's going to come down. It's not going to run away from you. Nvidia's not going to run away from you. Netflix ran away a little bit, but it has come down. But anyway, you're seeing a lot of algorithms kick in. A lot of these things sell off 20, 30%, and it's giving you an opportunity to pick up some great names like Apple, which fell below 140. Was it close to 160, I guess, a month later? Netflix, just mentions, up more than 40% from its December lows. But a lot of these companies, most of them, at these current levels, you could wait and get in at good prices, and you'll probably get them. So the companies I'm seeing right now, lots of ideas, really cool stuff. And, if you're a subscriber to my services, I'm going to be recommending a lot of these names in my newsletters in the months ahead. So really exciting stuff for you. With that said, I hope you enjoyed my interview with Matthew Sullivan. Again, we're finally launching our Curzio Equity Owners Token. Should be late next week. If you're an accredited investor, if you're interested in seeing our white paper or just learning more about this deal, email me at frankcurzioresearch.com. That's frank@curzioresearch.com. And since this is only open to a few hundred investors, we're not upsizing this offering like what you see with offerings. We're raising 10 million. Oh, we got the mayor raising 20 million. You're diluting the hell out of everybody. We're not diluting anybody. It's 12 million. That's it. Once we hit it, that's it. It's done. But if you're interested, be sure to reach out to me because I will be answering investors' questions personally. And that's my responsibility. It's a big investment for you, even if you're a credit investor. I want to make sure you know every detail, the risk, potential reward, everything before you invest. And also, this is a new industry. Few people have the ability to explain it to you right now. That's how early we are, which is pretty cool. So, it's the least I could do, answering some of those questions or your questions personally. And that's what we're going to do for investors, again, which is limited to a few hundred. But again, least I could do since you are going to become an actual stakeholder in my company or partner for life. Not just, hey, I own a couple of your newsletters. I own this. No, you're actually going to have an equity stake in your business. We're the only company in this industry that's going to offer that to you. And again, I want to make sure you're familiar with this process. You know the risk rewards. And again, any questions, comments, please feel free to email me, frank@curzioresearch.com. So guys, that's it for me. Be sure to listen to Friday's Frankly Speaking podcast because I'm going to break down the Super Bowl like I do every year and give you my pick. I used to be the biggest contrarian indicator. 8 years in a row, I got it wrong. And, listen, guys, I know football. I love football. Man, I'm playing fantasy football when I had Jerry Rice in his prime on my team. That's how long. Before it really blew up, where you have to look at the papers afterward, look at the box scores in the papers to find out if you won that week. And it always made sense to me, and I just lose all the time, except for last year. I said, take the Eagles with the points. Wasn't being biased, even though I went to the Super Bowl. I'm a massive Eagles fan. It was one of the great experiences of my life. But if you use the technical analysis, hey, I just bottomed here. And after this Super Bowl means I'm going, if I get it right again, that means I'm trending higher. So as a technical analyst, you start really investing in me. But I'm not too sure if I should tell you to. I used to do this analysis so you take the opposite and make money. That's what I used to do. But last year, actually, the Eagles won. And this year, I'm going to break it down on Friday's podcast. It's going to be a great Super Bowl. Tom Brady, I know he's there again and again and again. And so many people hate the Patriots. And I get it. And, the Rams, look, both teams, man, just a player, too, that got them there. One a pass interference call. Another one was a guy just lining up off sides. Or Brady's interception would have happened. And both of those teams don't make it. But these guys are going to I think it's going to be a pretty cool Super Bowl. We'll see. Break it down for you. Give you my pick. So be sure to listen to Frankly Speaking. And that podcast is going to be on Friday. Anyway, guys, thanks so much for listening. Really appreciate all your support. Love you guys. I'll see you in 7 days. Take care.
The information presented on Wall Street Unplugged is the opinion of its hosts and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility. Wall Street Unplugged, produced by the Choose Yourself Podcast Network, the leader in podcasts produced to help you choose yourself.